a lot of what we saw last night was pretty much as expected, right? It was an opportunity for him to really push this family plan as part of his overall kind of what we're calling like a physical and a human infrastructure approach. So I think that was all pretty par for the course. I think obviously he did make this point, right? This trickle down economics hasn't worked is his argument, which really points to that redistribution that has so far pretty much characterized his presidency. And obviously what it means then for the investor debate is, what does this mean for capital gains tax? What does it mean for corporate tax? What does it mean for high income tax? And ultimately, is this going to be bipartisan or is it going to be single party led?
Well, what it appears to mean, Stephanie, in the president's own words, that those taxes have to go up. Now, the president did say middle-class taxes. Ironically, middle-class federal income taxes are near the lowest they have ever been on a post-deduction basis. So we've got a lot of these big numbers, but you've got to pay for that somehow. With middle-class taxes coming down, and I only half-jokingly tweeted last night that the Democrats are now the party of tax cuts. Middle-class taxes keep coming down, and they're going to go down further on a federal level. You got to pay for it somehow. Do you think we will get higher corporate taxes and higher taxes on higher income families?
I think that that's what's going to happen. The question isn't, do they go up? The question is, how far do they go? I think if we take corporate taxes first, it seems like Joe Manchin has kind of really come out strongly. Again, I think this is all a debate that's taking place within the Democratic Party. It just doesn't seem like Republicans are going to be on board with anything in any of the infrastructure packages, really. So I think we can kind of put that to the side. Within the Democratic Party, Joe Manchin has said he's not keen on a corporate rate that's higher than 25%. So I think that puts us into a band of expecting something between 25 and 28% corporate tax, depending on how the politics of that play out. When it comes to capital gains, I can't see it going as high as what they're putting forward right now, right? It's very high. So I think we'll get a raise, but not quite as high as what Biden's proposing. And then I think you'll still see kind of pressure in terms of the stepped up basis, that kind of stuff is all going to come through. It's just a question of how far can they push it in order to fund what they're trying to do, right? As opposed to necessarily, are they going to do it all? I think these tax rises are coming. The question is just how high they come. And that's ultimately going to depend on the debate and negotiations that go on in Washington over the next few months.
And if we get some form of higher taxes, which seems very likely, Stephanie, will it hurt stocks? I mean, we've shown all kinds of data that while our viewers, CNBC's viewers, may not like it, not a lot of correlation between higher capital gains taxes and how the market does, unless, of course, the numbers are so big like they were in the 1970s.
Exactly. And this is where I think thresholds obviously matter. But what also matters is looking at this in the round, right? You said at the beginning just how much spending is being passed through to the economy under the Biden administration. And ultimately, I think that's how we need to think about this, right? It's not necessarily about headline level, is it good or bad for stocks? It becomes who are the winners and who are the losers. And I think in particular, for companies that are very exposed to the green transition, who are able to take advantage of those renewable tax credits, or able to engage with the building and the construction and the refurbishment involved in the infrastructure, those are the kind of companies that can win. On the other hand, if you're a company that's very exposed to, if you really have very, very narrow margins such that you really can't absorb and you can't figure out a way around kind of corporate tax raises, maybe that's more challenging. So I think that's how we need to think about it. Winners and losers, not overall headline.
Does Aberdeen Standard change its recommendations to clients based on anything you heard last night, Stephanie?
So no, the way we tend to do it is every quarter we've got a house view, and this will be part of a much bigger conversation that takes into account the entire global policy environment. But ultimately, this is one part of a much bigger Biden administration policy plan. And the big question mark for me in particular is, do they try and do this as two separate bills, right? It's been presented as a family plan and an infrastructure plan, but actually it looks like the Democrats are going to have to put this into one big bill. Bigger a bill gets, the harder it gets to pass. And that's going to affect the timing and ultimately the size and the composition.
Shepard Smith here. Thanks for watching CNBC on YouTube.